The debate is raging over how to bring down our high dollar, which is damaging the country's exporters. In an interview with the Q&A program today, the Green Party is suggesting printing money in a bid to bring down the value of the currency. But as Heather du Plessis-Allen reports, the government is not interested.
The threat of closure hangs over the Tiwai Point smelter, and if it does close, it'll be yet another casualty of our stubbornly high dollar.
We're also asking the national government to get off their chuffs and do what they can about addressing the issue of the exchange rate.
It's not just the smelter. All exporters are squealing under the pressure of the dollar. The Green Party's solution? Print more money.
We are the last country standing operating orthodox monetary policy. All of our trading partners have abandoned this policy, except for us.
It's a radical approach, but right now, major economies are printing billions. The Greens want the Reserve Bank to create credit and invest that in the Christchurch rebuild. That would reduce how much the government has to borrow overseas and deter international money traders, bringing down the dollar.
If it came down by 15%, that would make a significant difference to our manufacturers.
Knocking 15% off the Kiwi would take it from where it's sitting now at about 82 US cents down to about 70, but that would take billions of dollars. And there's speculation the billions would do little. Compare the Greens' suggestion of a $2 billion first round to what the US is printing at the moment. And the government says we're not in enough trouble to justify quantitative easing.
It's unlikely the quantitative easing to have any effect anyway, except having the Reserve Bank print a whole lot of extra notes, which will lead to inflation in the New Zealand economy. It's not the way to go.
We've got export sector in serious trouble. We're losing jobs. It's not just ordinary jobs we're losing high-paying, high-value jobs in the export sector. We have to do something about our exchange rate.
For Tiwai workers, it's already too late. 65 jobs are set to go. Heather du Plessis-Allen, One News.
Now, for months, the Kiwi dollar's been going from strength to strength, which has been putting the squeeze on our exporters. Now, the Greens have come up with a way to bring it down and make life easier. In a moment, we'll speak with party co-leader Russel Norman, but first this from Heather du Plessis-Allen.
The threat of closure hangs over the Tiwai Point smelter, and if it does close, it'll be yet another casualty of our stubbornly high dollar. It's not just the smelter. All exporters are squealing under the pressure of the dollar. The Green Party's solution? Print more money.
We are the last country standing operating orthodox monetary policy. All of our trading partners have abandoned this policy, except for us.
The Greens want the Reserve Bank to create credit and invest that in the Christchurch rebuild. That would reduce how much the government has to borrow overseas and deter international money traders, bringing down the dollar.
If it came down by 15%, that would make a significant difference to our manufacturers.
Knocking 15% off the Kiwi would take it from where it's sitting now at about 82 US cents down to about 70, but that would take billions of dollars. And there's speculation the billions would do little. Compare the Greens' suggestion of a $2 billion first round to what the US is printing at the moment. For Tiwai workers, it's already too late. 65 jobs are set to go.
Green Party co-leader Russel Norman joins me now. Good morning, Dr. Russell. Let's talk about this economic policy. It was launched yesterday. You said printing money is the way forward. What's brought you to this?
Well, we've been listening to exporters and those in the manufacturing sector. We've lost 40,000 jobs over the 4 years to June from the manufacturing sector. So it's a very big problem for the export sector. Plus our current account deficit has gone up to about 5%. Overseas debt, the net overseas debt's about 75% of GDP. So it's a big problem. So the proposal we launched yesterday into the debate included looking at lowering interest rates, which is important, but also looking at using the kind of quantitative easing tools that our competing nations are using. So the effect of them using quantitative easing is that it lowers the value of their currencies and hence increases the value of ours, which has a very detrimental effect on exporters.
How much of your idea is based on others are doing it, so why shouldn't we?
It's almost not so much why shouldn't we as what choice do we have. I mean, currencies, the price of currencies is a purely relative issue. You know, the price of our currency is relative to other currencies. And so because they're doing it, it's having this very significant effect on our currency. You know, the UK is doing dramatic quantitative easing, so is the United States, the Bank of Japan, and now the European Central Bank. So we need to act to protect ourselves. I mean, we might have, if you like, queries about the wisdom of all of those countries doing quantitative easing, but the fact that they're doing it puts us in a very difficult situation. And if we don't respond, then we'll sit here and watch thousands of jobs disappear out of the export sector, and we'll see much higher levels of international debt for New Zealand, and that's a long-term problem.
I guess you're right, though. You can question the wisdom of everybody doing it, but if they are, that idea of jumping on board the train, we know that people's savings will suffer, that consumer products, the prices of those would go up, which would potentially hit the pockets of New Zealanders who are on fixed incomes. It would help potentially manufacturers and exporters, but the market is this very complex beast. So I guess how much would the Greens like to see the government in charge of what the Reserve Bank does?
Well, the main thing is to broaden the mandate of the Reserve Bank. So the International Monetary Fund, even 2 years ago, was saying that small open economies shouldn't just be targeting inflation, they should also be targeting the exchange rate to make sure the exchange rate's set at a level at which their export industries can compete. So, you know, broadening the mandate of the Reserve Bank so that it can look at both of those things, I think, is critical, and giving it the kind of tools that it needs to do that.
Yeah.
It's certainly true, you know, that if you have a lower New Zealand dollar, it might have some impact on import prices, but if people lose their jobs because our export sector goes under, that puts people in a very difficult situation and will have ramifications right across the economy.
Greens always been very pro-research and development-led economy. Do you think that we you know, should be moving in that direction and away from an export and manufacturing economy?
Well, we can't move away from an export economy, obviously, because you know, in order to pay for all the imports, it's critical that we have a well-functioning export sector. But high-value manufacturing is really essential to an efficient and modern economy. I mean, you can't, if you like, the manufacturing sector is 250,000 jobs. We've lost 40,000 over the last 4 years to June. It is a huge employer, a huge part of our economy. Yes, we want it to get into more advanced products, so research and development is critical to that. But what even some of them, you know, some of our most efficient and effective exporters are telling us is that this level of the dollar is destroying their margins, and a number of businesses are going under and laying off staff in the export sector. It's really critical. I mean, you know, I would say to the government, you know, the challenge for the government is, can you sit on your hands and watch thousands of jobs disappear and watch the manufacturing sector get decimated and the export sector get decimated? It's critical that we take action to protect that sector for the benefit of the whole economy.
And you think quantitative easing is the way to do that?
We think it's one part of it. That's why we released a package. It had 3 parts to it. You know, one, looking at interest rates and reducing interest rates, because the overvalued interest rates in New Zealand attract all this money from overseas, which is coming in to take advantage of our higher interest rates compared to other countries. And that carry trade, as it comes into New Zealand, pushes up the value of the dollar. We're also looking at ways to control asset inflation, particularly in the housing sector. So there's some tools around that we will release yesterday.
Yep.
And then there's the stuff around quantitative easing. So it's a 3-part plan. We need to use the levers that we have.
Russel Norman, Green Party co-leader, thanks for joining Breakfast this morning.
Pleasure.
Hands-off economic policy, that seems to be the national way. You're a market man.
Yeah.
Greens have come up with an economic policy saying that the Reserve Bank rules need to be readjusted. It shouldn't just be focused on keeping inflation down.
Yep.
It should be focused on the stability of the currency. Is there any merit in that?
Well, we already have that. So the primary focus is inflation, and you can't ask an organisation to have lots of different primary focuses, or it doesn't make sense.
Is inflation the kingpin? Is it the right objective to have number one?
In my view, yes, but you've got to remember the Reserve Bank Act and the Policy Targets Agreement is broader than that. So it does say they've got to look at output and they've got to look at all sorts of other factors. So again, that's been reviewed on numerous occasions, last time under the previous Labor government in 2008, and they found that we had world-class policy, and most countries follow what we do.
Is this an election-winning policy idea? Because every year we're seeing manufacturing jobs lost, people being made redundant. It feels scary. It's bad for New Zealand.
OK, so we wouldn't agree with that. In fact, if you look at the data around manufacturing jobs, have been going up slightly. So this latest idea of the Greens to print money That's a pretty wacky idea. So, okay, why do we think that? Firstly, if printing money made you rich, Zimbabwe would be the richest country on the planet, and it's not. Secondly, what it does is it increases money supply. So that increases inflation. That means your interest rates would go up. So your mortgage costs would go up and your business costs would go up. It means the cost of everything you buy would go up. It means your price of petrol and the likes would go up. So yes, it might bring your currency down. It might be a byproduct of that, but at quite a cost to the rest of the consumer. Countries have really got themselves in problems with inflation, like Germany and Argentina. They would probably attest that it being not that great an idea. And also, our economy's not in bad shape. The Greens are saying, let's deploy something that might work in a place like Spain, where there are terrible problems, but we grew at one of the fastest rates in the OECD. We created 57,000 jobs in the last couple of years. We don't have a crisis. They could create a crisis for us, but we don't currently have one.
Do you think we need more debate around this idea?
Well, they're welcome to debate it, and I think you're going to struggle to get a serious New Zealand economist who will come up and say this is a great idea under the current conditions we've got.
Prime Minister John Key, thanks for joining Breakfast. With me now is Shamubeel Eaqub from the New Zealand Institute of Economic Research. Good morning, sir. You've heard Prime Minister John Key, I assume, and Russel Norman there. Tell me, what is your response to the Greens' economic policy?
Well, they've had a few different policies. It was quite a jumble. The idea on capital gains tax, not bad if it was really comprehensive. But the idea in terms of quantitative easing, very against it, mainly because we're not in the same economic situation. I hate to agree with the Prime Minister, but the fact of the matter is, we've had an economy that's okay. We have interest rates that can be lowered further. The situation in the US, UK, Europe is that they're at their last resort. They can't do anything else. And it's desperate measures, and the fact of the matter is we're not even sure if they work.
So you're saying that this would not help manufacturers out? This is not what New Zealand's needing at the moment?
Well, the story with manufacturing is that it's been in decline since the 1970s, so it's not exactly a new thing, and manufacturing is hollowing out in advanced economies around the world. It's a byproduct of getting richer. So, there are other issues in terms of why manufacturing is weakening, and we need to have a think about it, but lowering the currency on its own through some fairly draconian measures of losing independence of a reserve bank, it seems like a very extreme move.
So do you think that it needs to be debated? Do you think that we should be looking at policies that will help us take control of our currency? We know it's free market at the moment, it's floating, it's very independent. Do you have any sense that that needs to be reined in?
Well, I think we need to choose what we target. So either we deal with inflation or we deal with exchange rate. You can't have both. But at the same time, what we need to do is we need to make sure we have real policies on things like superannuation, aging of the New Zealand population. We need to have access to international markets through free trade agreements. We need to deepen our capital ties. Those are the kind of fundamental things that the government can influence through policy. Exchange rate is not one of them.
OK, the Greens have suggested that the Reserve Bank Act needs to be looked at and reviewed. The Prime Minister said no, it's constantly looked at. What's your opinion on that?
Yeah, the Reserve Bank is actually has been looking at macroprudential tools, that they call it. Essentially more ways to make sure that we don't have housing bubbles, the exchange rate doesn't get away too far, all those things. So it's already happening in the background, and it's actually a good thing. The Reserve Bank has a fairly wide mandate to make sure there is stability in the economy. But you have to look at one measure to sort of control, because it's like when you've got a very blunt tool, you've got to make sure you're fairly focused on one particular thing.
Exactly. Now, Shamubeel, can I just check with you? Russel Norman is saying, look, everybody else is doing it. The UK, the US, Japan, why don't we? If we don't do it, we get left behind. How do you respond to that?
Isn't that what you get told at the schoolyard? Just because everybody else is doing it, it's not a good idea. And the fact of the matter is, they're doing it because they're desperate. They have no other measures. New Zealand is not in the same case. We can cut interest rates if we need to. We can increase government borrowing and government spending if we need to. We're in a very, very different situation. This is not the time. This is not the time to weaken our economy and our policy settings.
Shamubeel Eaqub, economist for NZIER. Thank you for joining Breakfast.